stock market just had one of its worst days since 2022, with the Dow Jones falling almost 900 points because investors are getting worried about a recession. And it wasn't just stocks that felt the heat. Bitcoin prices fell to below $80,000 a coin, and even gold prices dipped into the red. Now, market downturns like these can be very scary, but they also create some of the best wealth building opportunities of our lifetime, because while most people are panicking, the financially savvy are picking the good investment opportunities. This is why Wall Street gets so rich during recessions, because they don't do what everybody else is doing. And in this video, I want to go over two things. Number one, I want to explain why investors are suddenly getting worried about a recession. And number two, I want to talk about how you can find the investment opportunity through all of this craziness. So let's jump right in. What's going on in the economy right now to get investors nervous? Well, it all started with the Trump tariffs, which were paused and then brought back. And now Trump has been talking about enforcing the tariffs and potentially beefing up the tariffs. This has investors concerned about what is this going to do to the economy, what's it going to do to spending, and what's it going to do to inflation, which brings me to concern number two, which is inflation. We haven't solved the original inflation problem, and now investors are concerned about how tariffs could make inflation worse. Then we have number three. The Federal Reserve Bank recently came out and said that they don't expect the United States economy to grow in the first quarter of 2025. They don't expect it to stay the same. They expect the United States economy to shrink in the first quarter of 2025. Then we have number four, United States fiscal policy, because we just got a new report talking about concerns for the United States credit ratings, because we still have a lot of deficit spending happening. We're potentially cutting taxes. We're also potentially cutting spending, but there's a lot of concerns about how the United States government is going to continue funding all of their operations with the tax revenue that we have. And then we have number five, which is what CEOs are saying. The Delta CEO just came out and said that they are reporting a decrease in consumer spending, but also corporate spending, because people and businesses are concerned about the economy. They're concerned about a potential recession. Now, all of this come together have been creating these recession worries, and this is why today I'm hosting my workshop. It's a free workshop where I'm going over number one, tariffs, to Doge, to AI, and how these things create an investment opportunity for you. It's completely free, but you do have to register. We don't have a ton of spots left. I'm doing it twice today, once in the morning at 10:30 a.m. Eastern Standard Time, and again in the evening at 8 p.m. Eastern Standard Time. So if you have not registered yet, make sure you do so soon, because, well, the workshop is soon and we don't have many seats left. So if you want to join, I have that link for you down in the description below. This brings me to number two. How do you find the opportunities to actually build wealth through all this craziness? Because the reality is market downturns create some of the best buying opportunities of all time. Now, to really understand this, let's take one step back. If you are an investor, this means you're investing for the long term. And if you are an investor in the United States stock market, that means either A, you believe in the United States economy, or B, you believe in a specific company in the United States. And if you are an investor, this means you're investing for years. So if you have more than 10 years in your investing career, what's happening in the day-to-day does not matter. Because what we have seen over the last 100 years is that recessions happen. We have seen 16 recessions over the last century. So we average more than one recession a decade. And every single time you see a recession, people panic, people freak out. They say that the economy is going to collapse, and there's a lot of panic. But each time what we have seen is the markets go down, and then markets eventually go back up. And if you are a long-term investor, meaning you're investing in the economy for years or decades, well, buying something on sale gives you the opportunity to buy it at a discount. And this is what market downturns can do. But the reason why it's so difficult is because many of the traditional media players are in the business of selling you fear or panic or emotion, because they get paid when you click. And that's how the game works. I know this because I own a financial media company. My company, Briefs Media, has a free newsletter called Market Briefs. You might have heard me talk about this before. But we publish what's happening in the financial markets, and that's why I'm such a strong advocate of market briefs, because, well, we don't need all that sensationalism, because all the news is in one email. But I've seen the way that the game works. And so people get caught up in the fear or the greed. During the fear time, people are selling because they're scared the markets are going to collapse. And it's the same story. It's this time is different. The economy is not going to recover. The markets are never going to recover. It's this constant fear and anxiety, so people want to sell and cut their losses. But what we've seen time and time again is the markets go down and then they go up. And we know this because we can take a look at things that have happened through history. 2022, markets crashed. This was one of the worst days in the market since 2022. In 2022, the stock market fell by about 20%. Well, people that were buying in 2022 bought at a good discount and are still seeing a big gain between then and now. In 2020, we saw the fastest stock market crash in the history of time. It was the fastest stock market crash even when you compare it to the Great Depression and the Great Recession. During that time, there was another layer, which was, of course, the pandemic. And so people were freaking out. And I know this firsthand because I was making YouTube videos during that time and I talked about how I was buying in phases on the way down because nobody knew what was going to happen. Either the world's going to end or markets are going to eventually recover with the economy. Well, nobody expected, including me, the extent to which the Federal Reserve Bank was going to stimulate markets, but they did. And the stock market recovered very fast. We saw the fastest stock market sell-off in the history of time and the fastest stock market boom in the history of time just a few months apart. But let's go back in time even more. During the 2008 financial crisis, stock prices crashed and real estate prices crashed. Everybody talked about how the financial system was going to melt down. People were running away. The people that were buying made a lot of money. I know that because that was when I got involved. I started investing in real estate after the 2008 crash and was able to buy a number of great deals at a very big discount because nobody wanted to buy. Even the people that had money didn't want to buy. And so I want you to understand that because when there's panic, I want you to see opportunity. Now, you have to understand your game because the game that a lot of people try to play is they say, I'm going to try to time the bottom. Well, that's not a strategy. I hate to break that to you, but timing the bottom is not a strategy because nobody knows when the bottom is going to be. Nobody knows if the market's going to fall another 40%, another 5%, or if it's just going to start going up. Nobody knows that. And this is where you have to know the game that you're going to play. You can be a passive investor, or you can be more of an active investor, or a little bit of both. But you have to understand the game because a lot of people say they're one and then do something completely different. A passive investor is somebody who follows what I call the ABB strategy, always be buying strategy. This is where you're buying the economy. You're buying a piece of the stock market every week, every 2 weeks, every month. And you just let the markets do their thing. When markets are crashing, you're buying. When markets are going up, you're buying. When markets are sideways, you're still buying. And when you follow ABB, you're always buying. The A in ABB stands for always. Always be buying. And so I have a system that does this. Every week, I'm buying a little bit more, no matter what. I don't care who's in the White House. I don't care if the markets are crashing. I don't care if the markets are booming. I'm always buying. That's happening automatically for me. But I also have a little bit more of an active strategy as well. My active strategy is where I'm looking for what I call market shifts. I'm looking for more unique opportunities. Now, this takes more work, more time. I don't recommend this for most people because now you have to actually be involved and you have to find what is a good opportunity for you. This is where I want to know where the money is moving. I'm looking for more individual companies to invest in. And here, I'm just waiting for a good price. I'm waiting for a good time to buy when I find a good company. And so if I find a good company, I'm researching an industry where money is going into. I believe that the specific industry is going to be worth a whole lot more in 10 years. That's the first part. Then I want to find a good company. I like these companies in this industry because I believe they're innovating. I think they got a good CEO. I think they got a good financial statement. I like these companies. I just need a good price. I need a good deal. Well, when you see big market sell-offs, well, that can also create some of the good deals because during market sell-offs, bad companies go down, but good companies also go down as well. And this is why your strategy is so important because a lot of people freak out and they just sell everything because they see their portfolio in the red. They say, I'm going to become an investor, but as soon as things start to go down, they become traders because your market portfolio didn't go up every single day. That's not how it works. We've seen 25 bear markets in the last 100 years. A bear market is when the stock market falls 20% or more. It's a part of the system. Yet people freak out every single time. People panic every single time. I've talked about this. month after month, year after year after year. Next time you see markets go down, here's what's going to happen. People are going to freak out, they're going to panic, and they're going to forget their whole strategy. And this is exactly what we saw happen. I know this because I can see the comments on YouTube. And what I want you to do is remember, the people that build wealth are the ones that don't get caught up in the emotions. Emotions are the enemy of profits. Find the opportunity. If you are an investor, I want you to find the opportunity. But in order to do that, there's a few steps you got to take, and I want to go over those right now. Step number 1, stay calm. Once you can stay calm, now you can start seeing the opportunity instead of all the noise. Number 2, you got to have money to invest. You got to have a money system. Okay, if you don't have money to invest, but you see an amazing investment opportunity, it doesn't do you any good because you can't actually invest in it. And this is where I hope you've been watching my videos for a little while and actually taking action to put money aside to invest, because I've been making these videos for a decade now. Number 3 is you gotta know your strategy. I just talked about being an active investor versus a passive investor. Know your strategy. That's when you take action and execute. Now, of course, I gotta give you a little disclaimer, okay? Because I'm just a random guy on YouTube. I'm not a financial advisor. Investing has risks. You're never guaranteed to make money when you invest. In fact, you will lose money at some point. So make sure you always do your own due diligence and never blindly trust a random guy on YouTube, but you gotta understand the game. History doesn't exactly repeat itself, but it does rhyme. We know that market downturns happen. We know that recessions happen. We can just take a look at history to see how many times it has happened. Now, when we understand that, you want to be an investor for the long term if you believe in the American economy. I do. And if I believe in the American economy for the long term, that's 10 years plus, and I have a long-term investment horizon that's 10 years plus, well, I'm just going to stick with my strategy, and when things go down, well, it creates an even better buying opportunity. And now you execute and you forget all the noise. Focus on the strategy, not the emotions. That's what financially savvy people do. You create a money system so you always have money to invest, and you create an investing system. That way you know how to execute on your investments, and then you stick with your strategy. That's how you build wealth. And if you stick with it, that has been proven time and time again. If you can get a 10% return on your money year after year, you have a very good shot at becoming a millionaire or multimillionaire, depending on how much money you invest and how long you invest your money for. Just use a compound interest calculator on Google to see what the numbers look like. But this is where, again, we're seeing craziness. There's craziness happening in the markets. There's crazy things happening in the economy. I want you to find the opportunity. Again, I have a workshop today where I'm going to be going over more specifics of what's happening and where those opportunities are. I hope to see you in my workshop. But again, even if you're not there, I want you to stay calm, and I want you to have a system in place. That way you can actually capitalize on opportunities instead of being the person that's just panicking and freaking out and making everybody else on Wall Street rich because you're selling your stocks that are good at a discount. Obviously, if you own a company that's on the verge of bankruptcy, that's a different story. But if you have a good company and you have 20 years in your investing career, I want you to be cautious and know the game that you're playing. And with that, I'll see you on YouTube.